Good morning, everybody. Thank you for tuning into this week's Spiders Report or calling in. Hope everybody had a nice weekend. It was pretty nice here in New England. As most of you probably know, I live in Connecticut, so the leaves are all changing. And a few months ago, my wife got me a bear making kit, and I made some beer, and actually it came out really good. So I had some of that this weekend. So, it was a fun weekend. So anyway, I'm sure you have a lot of questions about the market. If you follow us and if you listen to last week's call, the sell-off came as no surprise whatsoever. We talked about why the market was setting up to sell off. Various important support levels have been broken. So I think that this week we're going to see a rally or at least a consolidation, and I think that this sell-off is over, at least in the short to intermediate term. So we'll take a look at why I think that. And hopefully I can help you as much as I did last week, at least if you listen to what I was saying. All right, so just remember in financial markets, there are levels that are more important than others with the amount of demand and with regards to the amount of supply and demand that exists to them. And prices are always doing one of three things, right? They're always going up, going down, or staying the same. So if you can understand this stuff and you can identify these levels and trends, it can help you develop profitable trading strategies. Now, I would say stay away from things like Gann theory and harmonic charts because it's like Bigfoot and UFOs. And I can guarantee you that there are no credible traders that work for good institutions that look at stuff like that, right? At least in my 20 years of being a trader of various hedge funds, some of whom you know or have heard of, no one really talks about that stuff. It's just that people talk about Bigfoot and UFOs, but not in the sense of trading the markets. All right. So that's why we were able to figure out what happened in the market last week before it happened. All right. So now this week, I think we're going to see a little bit of a bounce, and I'll show you why in a minute. But the point I'm going to make now is that don't listen to what the media says, because whatever the story du jour is, they're going to be attributing that, to the cause of the bounce. Like, for instance, I don't know, Chinese economy is down. Well, the market shoved it off, so the market's up, or trade war. All right, here's the S&P, but I just want to go talk more about the whole noise thing. Just for instance, say someone has an account at Charles Schwab and they need to withdraw $100,000 for whatever reason. They got to pay for their daughter's wedding, or they got to bail their friend out of jail. They're buying a house, whatever the reason might be. They're going to call Charles Schwab and say, I need to withdraw $100,000 from my account. So the traders that work at Charles Schwab are going to have to sell a basket of stocks that equal $100,000 to raise the capital so this person can make a withdrawal. Say at the same time, someone else calls in and they have some money and they say, I want to put $300,000 into this fund, and it's the same fund. Well, guess what? The traders need to go out and literally buy the same stocks that they're selling. Okay. You can't just shift stuff from one account to another. It's got to go through a broker. So things like that cause noise, and it happens every day. It happens hundreds of thousands, if not millions of times every day. So that's what's moving the markets. It's not trade wars or the Turkish lira or Justice Kavanaugh or blah, blah, blah. So anyway, let's take a look at the S&P here. All right. So, we had talked about this 270 level being support, and sure enough, it was. So we broke through that, right? Now we're getting close to this 260 level. The market is oversold, and there's been some really big volume. So that's why I think we're close to a bounce, because the 260 level was support all through the beginning of the year. Okay. Now it's interesting to know, and this shows how bottoms are always more choppy than tops, right? Look at this top. Look at how it got so close. It's basically within a point of 280 and a point of 280. And we had talked about this, that why 280 is an important level. But bottoms are always going to be more choppy because fear drives selling, whereas hope drives buying. So it's much harder to get exact bottoms on bottoms, right? Sounds like that Queen song. Oh, actually, no, Spinal Tap, Big Bottom Girls. All right, well, whatever. How can I leave this behind? All right, anyway, so you can see the lows around here or back here around 260. Lows here were 260, lows here were 260, and we're getting really close. And I mean, I think the S&P closed at, or the SPDRs closed at 262, so that's that precise. But I'm expecting a bounce tomorrow, some point this week, at least some consolidation. All right. Big part of why I think this is because of the volume that's traded. All right, so take a look at this volume. This is the same chart that we just looked at, but I just expanded the volume, okay? Look at how much volume we've seen. Now, the last time we saw volume this high, it was this low here back in February. You can see at the low here, we also had a lot of volume. At this low, there was even a little bit more volume than typical. But anyway, so we've seen this massive volume, which is really massive. I mean, look at this. This is like, 4 times the height of this, right? I don't know what that is, 300 million, 100 million. But anyway, so we've seen some huge volume. The market's oversold. It's at support, and we're going to take a look at some of the other sectors which are testing support. And remember, the reason why we knew the market was going to go down last week was because certain support levels looked like they were going to break. Now we're at support levels that look like they're going to hold. All right. So, I mean, just listen to last week's call again. It's on my website. Or just let me know if you want. I can just email you the file. All right, so here's the tech sector, okay? And this tech sector is especially volatile, so it's really hard to get precise levels here, which is why I don't trade these things, okay? But anyway, you see at 68.60 was an important level, and it was, where this initial thing was before we rebounded. But anyway, we're oversold, we're below it. I mean, at least in the short term, I would expect a little bit of resistance there. But, like I said, I'm thinking the market's going to rebound. But this is one of the things to watch, okay? If the tech sector can't get through this level, then we'll probably just see a consolidation as opposed to a rebound. So that's why you got to pay attention to all these different sectors. And this is the biggest sector in the S&P. It's like a third of the makeup or 30% of the makeup. All right, now this is interesting to me. The financials, okay? This is a 2-year chart of the financials. So you can see we're testing 25, which is important psychologically, right? But it was resistance here back in March of 17 and throughout the summer of 17. So we're oversold, we're at support. Pretty simple. If we weren't oversold, I would say the odds were much greater that's going to go down. And maybe it will go down in a few weeks. We don't really make long-term predictions here, as you all know. Usually, we're just looking at the short-term dynamics and supply and demand dynamics in the market, but these could drive the market for the next few weeks, if not the next few months. So anyway, like I said, we're oversold. We're at support. If we do rally, I'm going to be looking for resistance here at the 2640 level because that was the bottom here. And I know this is hard to see, but this is a 2-year chart. It was the bottom here for like 2 weeks before this sell-off came along. Just enjoying a sip of my delicious homemade beer. So anyway, sorry. So anyway, I just like to show this chart to people who don't believe in charts, right? This is the XLFs again, going back 13 years, and look where the exact top was here, okay? Right around 30.50. That's exactly where the top was in January. And now that the markets are kind of heading lower and this trend is broken, this isn't as an important thing to look at, but back in January, we were looking at this. So eventually these things are going to rally and test this, assuming our civilization doesn't collapse. And I think when they do get back up there, we'll expect some significant resistance around this level. I don't think it's going to get there on this rebound. I'm talking about like the next big leg up in the bull market, which might be in a few weeks, in a few months, in a few years. So this is just more of like a long-term perspective thing. This healthcare sector looks interesting, and I'm actually watching this for a potential trade. We had talked about why this 85.50 level would be support, and sure enough, it is. Yay me, got it right again. So anyway, 85.50 was resistance here. That was in February and March, and then again, this is hard to see, but this is pretty much the whole month of July was support. But here's why I'm looking for a trade here, because it's very oversold. Okay, and it's at support. So those of you who follow bull set trading know that we like to look at things when they get oversold at support or overbought at resistance. So it's oversold. So the odds are it's going to make a tradable bounce. Now, again, here's the trick, right? Or not the trick. I shouldn't say that. It's not a trick. It's a skill or a discipline. You don't buy it until this downtrend line is broken. All right. Don't try to catch the bottom. That's the problem, and that's why too many people get run over because they just want to say, "Oh, I'm smart. I caught the bottom." Well, don't worry. I mean, do you want to be right or do you want to make money? That's really what it comes down to. All right. So oversold at support. Now, maybe these things consolidate and head lower. Okay. But if they're going to head higher, they're going to break this trend line. So now we have the setup. What is the setup? Sorry. What is the setup? The setup is oversold and at support. Oh, I've actually even wrote this up here. The setup is being oversold and at support. Now, what's the trigger? The trigger is going to be a break of this trend line. So I'm thinking we buy it around here if it rallies. This is going to be our profit sell target, and this is going to be our stop out sell target. And you should never, ever, ever enter a trade unless you know where your two sells are going to be. You need to know where your profit's going to be. You need to know where your loss is going to be. If you don't know these things, you shouldn't enter the trade, because if you don't know these things, you're just guessing, right? And like I tell people, if you're just going to guess, go to the casino, because at least you can get free drinks. So if you know what you're doing and you have a plan, you should know where your stop out is. You should know where your target is. All right. So again, we're watching this one for a trade. All right, here's a consumer discretionary sector. Okay. We talked about this 107 level. It was important because it was resistance here. If that's where we found support. Now you can see, well, maybe you can't see, but trust me, like that's like 4 or 5 days there. It's been resistance. So if it's still downtrending. If these things continue to head lower, I'm going to be looking for support around this 98.50 level because it was support back here. Okay. And again, this might be another trade setup. It's a little bit oversold, but it's not oversold enough that I'm expecting a bounce like what we just talked about in healthcare. So I'm going to keep watching this. If it rallies, I'm looking for resistance at 107. If it goes down, I'm looking for support at 98.50. And again, maybe this turns into a trade setup if we get down here and get oversold and break this trend line. The same dynamics we just talked about. So here's industrials, and this kind of got me by surprise a little bit because I thought the 71 level is going to hold. Because you can see it's an important level. It was important back here last year, about a year ago. It was important in May. It was bottom in July, right? This is another chart that shows why you should look at charts, right? I mean, I know we're away from it, but you know, at the time we had talked about how 80 was going to be resistance because it was resistance back here, right? So very simple. This isn't Gann theory or harmonics or this, that, or the other thing. Just understand the supply and demand dynamics. And if you are a competent technician, or if you're looking at a competent technician's work, that's what they should be talking about. I mean, gosh, these harmonic charts are hilarious. They're so funny. I mean, I don't even know what to say. I hope none of you follow that stuff. I mean, I guess if you follow me, you won't follow it because you know how wrong they are and how stupid it is. I don't know. Why do people follow that stuff? I don't know. Why do people believe in UFOs? Why do people believe in Bigfoot? Why do people believe in like the Nazca lines? I think the Nazca lines are funny, right? Like, why would ancient aliens need runways? I thought UFOs went up and down. So, so anyway, whatever. Oversold. I'm going to be looking for resistance at the 71 level. All right. So we've seen a few resistance levels that we need to watch this week. All right, I think we're having some technical problems here. I'm sorry. Stupid PowerPoint. All right, well, anyway, they're telling me everything is good now. Is everything good? All right, cool. All right, so anyway, so here's consumer staples, and this, to me, was very interesting. We talked about this last week, right? The rally in consumer staples was a bearish indicator for the market because staples is a defensive sector. Discretionary is what you want, like red wine or vacations. Staples is what you need, like water, food. So the thought is the markets are going lower, but people are still going to need staples. So it was very interesting action here. This rallied while the rest of the market was going down. So anyway, so it's holding above this 53.50 level. I mean, if the market rallies, I would expect this level to break. And we may even have a short trade here to look at. All right. So it's been going contrary to the rest of the market. So if the rest of the market goes up, this I believe will go down. Longer term, let's watch this 50 level. Okay. Look how important this 50 level is. And here's another perfect example of a chart that shows that certain levels are more important than others, right? I mean, look at this 50 level. This was the top all throughout 2015. And it might look like it's above it here, but you know, it's like 50, 75, 51. It's not dramatic. And this was the exact low last September, just over a year ago. And it was the top like throughout May. So anyway, 50 is a very important level here. If this thing breaks to the downside in a few months, probably see a meaningful trend lower. Okay. But in the meantime, just think about the dynamics I just talked about, how the rest of the market's going down, but money's flowing into this. Now, I don't know if it's people sitting around doing it saying, oh, gee, let's buy staples, or if it's quant funds, or both. I mean, it's probably both. Just something to impress your friends with at this week's cocktail party. Okay, here's something else I'm looking at for a trade is this energy. Now, last week we talked about how it became apparent that this support level was going to break. You could see it was support because it was the bottoms here. So anyway, big sell-off. Where are we now? Okay, we're right around 66.50. This was the lows in the beginning of the year. Very oversold, big volume. So this is something else I'm looking for a trade. Again, oversold at important support, but don't try to catch the fall knife. Wait for this rally to happen, if it happens. But what I'm saying is this, right? The way I mean, you do what you want. You can trade it however you want. But what I'm doing is I'm not going to try to catch the bottom, okay? I'm going to wait for this thing to rally and buy it on the way up. So even though it's at 66.50, I might be buying it at 68, okay? And I might be selling it at 71. So again, oversold at important support, but it doesn't mean it's not going down farther. So you need to wait for the trend break to enter a trade. And obviously it's the opposite on the short side. Here's a longer term chart of the XLEs. Now you can see this, how the 78 level has been important long term. Now this is kind of a, all these charts are fun to look at, but just ask one of your academic friends or fundamental friends or random walk friends how this could happen. How could this possibly be? How could this sector have the same valuation here as it did way back here? I mean, they won't be able to answer. You can see this too at this longer term perspective, right? I mean, this like the chart we just looked at was a shorter version, but here again on a longer term scale, you could see how important the 66.50 level is. All right, here's materials, and this is one of the things we talked about last week, how this important level was being tested. It looked like it was going to break, which is one of the reasons why we thought the market was going to be down significantly last week. So anyway, I don't know. I had a hard time. There's really no definable levels here. And this is only 3% of the S&P, but I would say if this thing does rally, you might be able to scalp a point or two out of it because it's trading around 51, and I think there's going to be resistance up here around 53. All right, and last but not least, here's the utility sector. Okay, you can see 52 has been support, was resistance back here. With support here. So if this thing, says lower, I think it's probably going to find support again. You see this trend has been broken. And remember, trend lines are not magic. They're just a way to graphically illustrate who's in control, the forces of supply or demand, right? So the forces of demand are in control. Oh, the trend broke. So that means the forces of supply are either overcoming the forces of demand or at the very least equalizing with them. So that's why trend lines are important. But it is an art, not a science. But you can see here again, back here was a rally, break of the trend line. What does that mean? It means in this case, the forces of supply and demand became equalized for the next month or so. So I think it's funny when academics talk about how trend lines aren't valid because we all know prices trade in trends. All right, well, anyway, everybody, thanks for tuning in. That's it for this week's Spider preview. Hopefully my my opinions are something you can make money off of. I know I'm sure going to try. And again, thanks for tuning in, and I will speak with you next week.